So we'll keep it on the desk because everybody does own Nvidia. Joe, you want to take this one while we work on Josh's audio?
All you need to do is just look at the growth of revenue. It's absolutely staggering. $26 billion in 2023, $60 billion in 2024, $130 billion in 2025. Estimate for 26, 206, 276 in 27, 321 in 28. I mean, that's just historic. It's unprecedented, something we have never seen in the capital markets, and it's the reason behind the astronomical performance that this company is exhibiting.
So the target goes to 210 today from 200 at Citi on higher AI infrastructure. The target at KeyBank is now 250. We'll go back to Josh Brown as we've fixed his audio. So I don't need to look to the side and do like, what's up with that? I can't hear anything because I'm told now I can.
My bad.
All right. There we go.
Look,
there we go.
I think the big takeaway for investors from this whole era is that sometimes the most obvious way to play a theme is the most obvious way to play a theme. You have to remember, 25 years ago, I was a retail stockbroker, and we were trading the original .com boom. And every time a stock would make a huge move, like a Dell computer or a Cisco or a JDS Uniphase or a Lucent Technology, my clients would be like, okay, but what's the next, right? What's the next Lucent? What's the next Cisco? And we would end up in stocks that would obviously blow up, like Ciena, and we would end up in things like Juniper Networks and Sycamore. The old timers watching the show will be chuckling along with me. NVIDIA is still the most obvious way to play the AI build-out theme. Just look at the CoreWeave deal today. It's a $14.2 billion agreement with Meta. It's great for CoreWeave because it diversifies them a little bit away from Microsoft and adds another monster company to their roster of clients in a very big way. But what does Meta get out of this? They're getting access to NVIDIA's Grace Blackwell 300 systems because CoreWeave already has that infrastructure in place and ready to go. All of this benefit accrues to NVIDIA in the end. So it may not go up the most from here relative to other AI plays, but it is the foolproof name for people that want to gain sector exposure or want to gain thematic exposure. And I don't really see that changing. They've got this unbelievable competitive position. We've been talking about it on the show forever because it's true. And everyone's always like, well, what's the next? What's the new NVIDIA? There are other ways to play AI. We've seen other chip companies work out. I've talked about Lam Research on the show. We've had Broadcom, we've had AMD. But in the end, I still think people would be better off looking for the obvious answers and defaulting to them. And if you've done that with NVIDIA, congratulations. We're now breaking into a new range, and who knows how high this one can go.
The chipmaker's gains come during a busy week of deal-making, including a planned investment of up to $100 billion in OpenAI. NVIDIA shares reached a new record on Tuesday, rising nearly 3% and increasing the company's market cap past $4.5 trillion. The stock is now up roughly 39% for the year and continues to draw investors as NVIDIA picks up the pace of deal-making, solidifying its position at the forefront of the artificial intelligence boom. Last week, OpenAI announced that NVIDIA would construct data centers with hundreds of billions of dollars worth of NVIDIA graphics processing units and acquire an equity investment in the AI business up to $100 billion. Then, OpenAI and Oracle revealed 5 enormous new data centers that are anticipated to house hundreds of thousands of GPUs. According to the businesses, the entire Stargate project will cost $500 billion. According to NVIDIA CEO Jensen Huang, over 70% of the money spent on a new AI data center goes toward NVIDIA's products. Following the OpenAI announcements, analysts at Citi lifted their price objective for NVIDIA from $200 to $210 Tuesday, citing an enhanced projection for spending on AI infrastructure. In an interview, Citi analyst Atif Malik stated, "We think OpenAI approached NVIDIA for assistance because NVIDIA has a very attractive product and because the number of users and compute being consumed per user basis is increasing. Meta, Google, and other companies are all significantly increasing their infrastructure spending. thus OpenAI is by no means alone. Nvidia is a major shareholder in CoreWeave, a cloud provider, which announced on Tuesday that it has agreed to pay Meta $14.2 billion for AI infrastructure services. With the exception of chipmaker Broadcom, which has seen a 40% increase in value due to OpenAI, Nvidia's stock is outperforming all of its mega-cap competitors thus far this year. By 2029, AI spending is expected to reach $2.8 trillion, led by hyperscalers and corporate titans. AI processors are dominated by Nvidia, which maintains its lead over rivals with the Blackwell series. Market expansion is fueled by the enormous power and money needed for infrastructure construction. With AI expenditure predicted to soar in the upcoming years, Nvidia and AMD appear poised to ride a massive growth wave. Citigroup recently calculated that by 2029, around $3 trillion will have been invested in AI infrastructure. With its powerful chips that power everything from data centers to AI research, Nvidia is undoubtedly at the top of the pack. Not far behind, AMD is working hard to gain footing with its own AI technology. As the competition intensifies, investors are paying attention to these companies because they are not only following a trend, rather, they are influencing the direction of AI. The figures in Citigroup's most recent prediction for AI spending are astounding. From their initial projection of $2.3 trillion, they now anticipate that the largest tech companies would invest more than $2.8 trillion in AI infrastructure by 2029. The main cause of this increase is the enormous sums of money that hyperscalers like Google, Amazon, and Microsoft have invested in developing their AI capabilities. Following ChatGPT's launch in late 2022, the AI boom truly took off, and businesses are rushing to catch up by growing their data centers and modernizing their technology. It's astounding how much energy and money this will demand. By 2030, the world will need an additional 55 gigawatts of electricity capacity, with the US alone requiring $1.4 trillion in that amount. These businesses are taking out large loans to remain ahead of the competition, since the cost of setting up this infrastructure is prohibitive. Imagine $50 billion for a single gigawatt of processing capacity. Furthermore, businesses like Hitachi and Eli Lilly are already demonstrating that AI can produce tangible outcomes, so it's not simply hype. According to the Citi analysis, IT firms are placing significant bets on the future of AI, demonstrating the breadth and depth of this investment wave. When it comes to the significant AI spending surge that Citigroup is discussing, Nvidia and AMD are at the forefront. With its technology enabling the majority of the top AI projects worldwide, Nvidia continues to dominate the AI chip industry. Citi recently raised Nvidia's price target to $200, citing high demand from businesses and governments placing significant bets on artificial intelligence. Nvidia maintains its lead despite intensifying competition with its latest chips, including as the Blackwell series. Conversely, AMD is gaining significant traction with its AI GPUs, gaining important customers like Amazon and Meta. Its AI revenues are anticipated to rise significantly over the next 2 years, despite significant competition and some export restrictions. Despite the challenges AMD confronts, analysts are cautiously optimistic about the company and regard it as a viable player. In general, Nvidia and AMD are both benefiting from this trillion-dollar AI boom, and the enthusiasm and promise of where AI is going next is reflected in their stocks. As these chip makers spearhead one of the biggest technological revolutions in recent memory, investors are keeping a careful eye on the situation. A new era of strategic consolidation in the AI race has begun with Nvidia's recent investments in Intel and OpenAI. These actions reflect a desire to control the computing industry of the future, as well as a need for safe, domestic supply chain security. Despite not being specifically related to cryptocurrency, the deals have a significant impact on the sector. BitMind and Komodo platform specialists say this collaboration will provide a new generation of robust, affordable hardware that will be especially useful for decentralized AI applications. Nvidia and Intel were once bitter rivals who engaged in intense competition for decades in the high-performance computing market. With a history of court cases and failed joint ventures that influenced the chip industry's basic foundation, this contest was not simply about market share, it was a struggle for technological supremacy. That everything changed last week. With the announcement of a $5 billion investment, Nvidia acquired a 4% interest in Intel, and established a new collaboration to create customized solutions for personal computers and data centers. The news wasn't shocking, but it wasn't shocking either. These businesses have grown essential since the AI race began. AI model training necessitates huge parallel processing, which is only possible with the help of CPUs and GPUs. Given the importance the current administration has placed on domestic manufacturing, Nvidia's decision to ensure onshore U.S. manufacturing while gaining strategic advantages over rivals like AMD and ARM is a smart one, according to BitMine co-founder Ken-John Miyachi. In order to fuel its next-generation infrastructure, Nvidia recently declared that it would invest up to $100 billion in OpenAI. In light of this, Nvidia's acquisition of Intel is a calculated move to guarantee its supply and cement a collaboration with the only other U.S. business possessing substantial production capacity. The desire for the American semiconductor sector to secure supply chains and keep a competitive edge in a race that is becoming more and more fierce is the driving force behind the new Nvidia-Intel cooperation. Nvidia's historically heavy reliance on the Taiwan Semiconductor Manufacturing Company, TSMC, to manufacture high-end GPUs is addressed by this investment. The geopolitical aspect of this cooperation is crucial. More than 90% of the most sophisticated circuits in the world, including the expensive GPUs that drive AI, are produced by TSMC. This manufacturing concentration poses a serious threat to U.S. national security in light of growing tensions between the U.S. and China over Taiwan. The U.S. government's drive for domestic manufacturing is consistent with reducing dependency on a single foreign supplier. In line with Processors' Act onshoring to offset China's chip ambitions and their recent prohibition of Nvidia processors, the deal demonstrates U.S. tech dominance. Ken-John Miyachi, co-founder of BitMine, told Be in Crypto, "It fortifies domestic AI manufacturing infrastructure, potentially reducing reliance on foreign foundries like TSMC. Nvidia is assuring a local supply chain for its essential hardware by investing in Intel." The partnership combines the key competencies of the two businesses, Intel's pedigree in x86 CPUs and extensive manufacturing scale, and Nvidia's leadership in AI and GPU architecture. The growing might of AMD, a US-based competitor that has been gaining market share in CPUs and GPUs, is another reason for this cooperation. It can also be viewed as Nvidia's Plan B, following regulators' rejection of its well-publicized bid to purchase UK-based chip creator ARM. Kadan Stadelman, Chief Technology Officer at Komodo Platform, said that this type of strategic consolidation is necessary due to the rapid advancement of AI. The powers of today's LLM AI will be much surpassed by AI technology in 5 years. He claimed that Nvidia and Intel are aware of how quickly the space is changing. Despite being separate sectors, AI and cryptocurrency often cross. Despite being indirect, this latest collaboration may have repercussions for the larger cryptocurrency market. With its primary focus on artificial intelligence and high-performance computers, the Nvidia-Intel alliance has little bearing on popular cryptocurrencies like Bitcoin. The two businesses have been increasingly separated as a result of the crypto industry's fundamental transition from general-purpose GPUs to more effective, specialized ASICs for mining. This partnership could still have a significant effect on cryptocurrency, though. Decentralized AI was specifically mentioned by experts as the main advantage of this collaboration. Instead of depending on centralized tech companies, these blockchain-based systems seek to democratize AI, by dispersing the processing capacity required for training and inference across a network of users. The collaboration will benefit decentralized AI firms, the majority of which use blockchain technology in one way or another. As these businesses integrate advancing AI technology, don't be shocked if they start to move up the list of the industry's top cryptocurrencies, Stadelman told Be in Crypto. In the meantime, older but still potent GPUs are becoming more reasonably priced as new, cutting-edge AI technology is developed through well-known partnerships. Decentralized projects can expand their capabilities without going over budget because to this greater availability. According to Miyachi, this may be a fantastic tool for decentralized AI projects who want to take advantage of any affordable computing platform they offer or older GPUs. In the end, the partnership between Nvidia and Intel shows that AI is becoming the center of global technology. The ripple effect, a potent catalyst that may ultimately solidify the fusion of blockchain technology and artificial intelligence, is the true narrative of cryptocurrency. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Let's look at Nvidia again, guys. Put it back up for me, please, and take it out at least a year. Just to show you it's not immune to sell downs. Yeah. We've seen it happen. And give me a year now, if you could, because it didn't happen that long ago. It did. If you look at the 1 year, it was in the spring that the stock had that reset. It got into the 90s.
It did along with...
And here we are with a reboot, a double since then.
It did along with the market, and it really was a source of liquidity, an ATM, if you would, at that point. I think if you're owning NVIDIA, you're asking yourself the question. Jim nails it. I mean, and you brought it up to Jim Scott. It is all the risk surrounds the spending slows. Okay, how are we funding the spending right now? If you take the Mag 7, obviously NVIDIA is not going to be part of this, and you also put Tesla to the sidelines, you're left with 5 companies who have $480 billion in free cash flow from operations this year to spend on the build-out.
Citi says CapEx across the hyperscalers is going to increase in 26 from 420 to 490 billion, right? So you're approaching $500 billion in spend, and through 2029, from 2.3 trillion to near 3 to 2.8. So you're already looking out to 29. I mean, are we buying these stocks today trying to guess what 2029 is going to look like? If we're suggesting that a lot of the market performance is in fact being driven by the spend, as Wolf suggests.
I would be remarkably surprised if along the journey to 2029, there is not some form of a stumble, whether it's in the economy, that allows that free cash flow grow, not to continue at the pace that we've seen it over the last several years. So I think you have to be prepared for that. It doesn't mean I want to sell NVIDIA. It doesn't mean at the end of that journey in 2029 and 2030, NVIDIA is still not the winner, but you just have to set the expectation. This is all about the ability to generate free cash flow. And there could be some form of a stumble where these 5 companies don't gather the free cash flow at the rate they're currently.
And remember, AI revenue this year is projected to be about $20 billion. So you're talking about numbers getting to trillions of dollars to spend. Yes, of course, I think the revenue will ramp, but that revenue has to ramp pretty damn fast at some point to justify these CapEx levels.
Scott, let me make the pedestrian comment here that we're about to turn into the fourth quarter. And this is a year in which, I don't know what the exact number is, but mid-20s as a percent of managers that are outperforming their benchmark. That becomes a problem for the other 75%-ish that get into the fourth quarter and say, oh my goodness, end of year is coming, I've got to throw money at the market, particularly if they raise cash during that time that we were talking about. Joe, you said it was a source of fund in April, when we had the post-Liberation Day meltdown. People are going to throw money at the markets, and where are they going to throw it? They're going to throw it at the obvious leaders, the things that are probably the safest.
What to do with it from here? The stock's up 18% in the third quarter. I know you're not. I do find it interesting, Amy, that you're trimming NVIDIA here. Why now?
Well, we've trimmed it. We've owned it since 2014, so we've trimmed it along the way up. Every sale has been a bad sale so far. Obviously, it's making an new all-time high.
So why is this time going to be different?
I'm not sure it will be different. I just think I agree with everything Josh said. This is the most obvious play. We're not selling out of it. But I do think it's prudent, as the position keeps getting larger, to just keep it in line. I do think at 4.5 trillion, you're kind of asking yourself, okay, what's the upside?
I mean, if you had, you know what?
Right.
If Brad Gerstner was here right now, you know what he would tell you the upside is? Because he said it this past weekend with Jensen Huang in his podcast with Bill Gurley. The upside's $10 trillion. Market cap.
Market cap.
That's
okay.
not 10 more trillion from here. But you're talking about a $10 trillion market cap.
A double from here. I think that's a while away. And I think, and with NVIDIA, you do get opportunities to sort of go back in. It hasn't been a straight line up. And I do think you're seeing more articles about what the return on this AI, this, as Joe said, the trillions of dollars that are going into AI CapEx right now. What's the return on that? When are we going to start to see that? I think you will get people questioning that again on the way up if it eventually gets to 10 trillion, which again, we'll see.
I mean, this remains a key question as Wolf, Jim, talks about AI spending expectations and how it's the biggest driver of market performance. So the hyperscalers are tripping over one another to continue to spend tens of billions of dollars towards their AI, their build-outs. And for now, it's great. And that's why Citi has raised its forecast for the hyperscalers to continue to spend the way they are. The moment, and who knows when it's going to be, could be next year, could be 10 years from now, who knows. The moment that there's a comment about spending less in CapEx, is that the moment that everybody says, oh no?
Yes, it is, Scott. But I think to the setup of your question, that we're probably a long way away from that. And it's not just because those hyperscalers have made such bold announcements, really quite frequently and quite recently. But it's also, there's other aspects to this that I don't think we give enough attention to, like the international exposure for AI buildouts. Let's not forget, just a few months ago, the President Trump visit to Saudi Arabia, the data center buildouts that are going on in the Middle East. Europe doesn't want to left behind. Asia doesn't want to get left behind. So I really don't think that, when you consider international, I don't think that moment of truth, if we'll